from a macro person's perspective. I look at Bitcoin mostly as a way to understand what are trying to diagnose essentially what are the primary macroeconomic drivers behind Bitcoin. And what I'd say is I continue to see that predominantly what you're seeing are risky asset positions, speculative positions. And I think mostly what you're seeing through the course of the year confirms that, in the sense of during the April turmoil, Bitcoin went down a lot. Bitcoin then recovered basically at all-time highs. Interestingly enough, right, recovering in a way that actually looked lagged to the S&P 500. And so, look, if you're looking for and in basically very little of that, maybe like in a single day time frame or a couple day time frame, did Bitcoin exhibit contra currency properties. And so maybe maybe it'll be like digital gold or at some point, but none of the empirics suggest that it's trading like that. And so, look, it could be it can be a fine asset if people want a more highly levered, effectively risky asset position to have on in their book. But recognize you're not getting something unique. You're getting more volatility of risky assets more than anything.
Yeah, so the whole store of value is not quite there for you yet. It sounds like if you're going to do
Yeah,
that,
and I
you
think
just do gold.
If you want a contra currency, like gold is continuing empirically to demonstrate that set of returns that are consistent with that, and to be honest, has 5,000 years of doing that. So, that's I'm not excluding Bitcoin for any reason other than the empirics are not compelling.